All right, think we got that ironed out there. Sorry, was having a quick little technical difficulty, but I believe everything is squared away. Just let me know in chat that everything is coming through loud and clear, but looks good now. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is roughly 8 p.m. Eastern Standard Time on September 29th, 2021. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. So yeah, let's jump right into it. Got quite a bit to talk about. Nothing unexpected, obviously. We've been on the pretty much same technical analysis, same direction, same course for quite some time now. Not like Peter Schiff sometime, like 20-something years calling for a crash. But basically, essentially all the macro stuff is just playing out exactly as expected. So going to try to keep it a little bit shorter than usual today and just make our way through our assets here. But starting with the TNX, 10-year treasury yields up here at 1.54% as expected. We have essentially confirmed the uptrend now. So we were in a long downtrend. We broke above the 200 exponential and simple, came back down, retested those areas, and now we have consolidated on top of them, and now we're getting a very clear and concise breakout. We now have a positive slope on the 200 exponential and simple moving average, telling us that we are not only momentum wise but also moving average wise in a strong trending upward direction. And obviously we got a beautiful break of our descending channel, which is a bullish pattern. That break led us into an ascending triangle, flat top, slightly higher low after higher low, and now here we are completing the measure move. Initial break of the channel itself, we have completed that perfectly. We're now consolidating and have nearly completed the measured move of the triangle pattern as well. I do think we're going to have a little bit of difficulty once we start getting up here near like the 1.62 to like 1.64 range. So it's not unrealistic to think that we could go into a further consolidation, come back down and retest the 618 Fibonacci level at 1.45. But as of now, I mean, we're just showing strength. So, and obviously this is going to correspond to the TLT chart, which is doing the exact opposite. This thing has basically been in a long uptrend for like 40 years, with a couple shorter trends inside of it. We then broke down, went into a downtrend, came back up, attempted to flip the trend back bullish. Now here we are back below the 200 simple moving average, below the 200 exponential moving average, and now the slope has flipped to the downside on both of them, telling us that on a daily we are now going into a longer consolidated downtrend. And keep in mind, this is all taking place with the Federal Reserve buying $80 billion per month in U.S. denominated bonds. So if they're buying $80 billion a month and they're going to start cutting back on those purchases, potentially, theoretically, like they claim that one day they're going to start decreasing their balance sheet as well. And then on top of that, eventually one day they're going to raise rates also. So that is three massive pressures on bonds, prices of the actual bonds themselves. And then obviously, as we can see from the TNX 10-year treasury yield chart, we can see that the market said F you to the Fed. We don't care what you're saying. We are raising rates. So obviously basically telling the Federal Reserve to go F yourselves, you scumbags, you inside trading bums, you asset propping up, pieces of what. Basically, I think the Federal Reserve is at least partially, if not mostly, responsible for a lot of the problems in our country right now. But that is all beside the point. And if you live in a different country, I'm sure your central bank is also a piece of trash. And I'm sure that they probably have a lot to do with wealth inequality and, many of the other problems that plague your country as well. So not just an American problem. So. VIX next, volatility index has broken to the top of the range, come back down, consolidated, and now here we are hanging out in the top of the range. We are now above the heart line of our channel. The red the top, obviously, the green the bottom, and here we are above both those heart lines. If we consolidate here long enough, I would expect a move back up to the top of the range somewhere around like 28, and potentially a break that could take us up extremely high. And that is of course going to correspond with a stock market crash. Do I think that's necessarily going to happen? Well, we'll wait and see, but it doesn't look good for now. U.S. oil consolidating at the top of the range, basically showing tons and tons of strength, getting ready for a technical breakout to the upside. U.S. oil looks very strong. I do expect it up in the high 70s, low 80s very, very soon. Dow Jones is next. So we basically had that initial breakdown as expected. We front ran the 200 exponential and simple, but we're seeing now the 200 simple is on top of the 200 exponential, showing some weakness in the trend for the first time since our crash. We then broke back up, attempted to come back and get back on top of the 821, failed to save the trend, and now we expect further downside as we did in fact close another day below the 8 and 21 moving average. As long as these two are red, we are in at least a temporary correction or downtrend. I do expect strong support around the area of 33,275. We have the 200 moving averages. We have the previous lows here, etc. But this to me was just a reaction rally, a buy the dip mentality that has been Pavlov's dogs into the head of market participants. As we see very little volume coming in lately. And this just tells me that all the dumb money, all the retail traders, all the idiots are just buying the dip because they think that the stock market can never go down. But here we are getting towards the close of the month, and we're seeing for the first time here from the highest levels ever in existence of all time on the monthly chart in the Dow Jones Industrial Average, we are seeing the MACD at highest levels ever, and we're seeing the first weakness we have ever seen at the highest levels we have ever been to. So that tells me that we're probably going to get a little something more than this little itty bitty red candle right here. We do have 1 day left before this closes, but we have now engulfed the previous 1, 2, 3 months of price action, and we'll probably move back down to the moving average, potentially engulfing the last 4 months of price action. So, very, very pathetic, but not unexpected whatsoever. S&P, again, exact same chart. Broke down, tried to save the trend, could not do it. I would expect us to break down potentially to our next support level, somewhere around 424 or 4,240, depending what you're looking at. But basically, we have a 200 exponential and simple moving average, getting ready to do that same cross right around the 415 mark. So we'll see what happens. But again, if we switch over to the monthly chart, we have now bearishly engulfed our top candle right here. Again, not crazy weak at this point in time. We do have the 8 moving average at 418. We do have the 21 moving average down at 381. But we're so far above the 200 exponential moving average. And eventually we will revert to the mean one way or the other. We are basically maxed out on the stochastics. And again, all-time highs on our histogram here. And we're now showing some weakness going into the end of the month. So it would not be unrealistic to think that we get continuation to the downside. Massive amounts of insider selling. Smart money has been distributing their positions here and basically just letting the price float up, letting the retail plebs, pump it up as much as possible. And now that they're not going to be getting nearly as much free money, now that they're going to have to, go back to reality, all of a sudden there's nothing to push the price up. We talked about this for some time. There's basically no buying coming in, barely any buying coming in. So if any selling started to come in on any of these indexes or assets, it would obviously just smash the price down. And, we're only seeing the beginning of that as far as I'm concerned. Again, we could still see bounces back to the upside, but this is basically a bounce up and failure on the NASDAQ. This is our IXIC gap close right here. Fails to get back above the 821, and it looks like we're headed down here. We've already reached our key support levels down here. Next thing to do would be retest that previous high and the 200 exponential and simple moving averages. And again, if we switch over to the monthly chart, again, bullishly or bearishly engulfing the last 2 months of price action. We have the 8 moving average on the monthly at 14,175. We have the 21 moving average at 12,454. Record levels on the indicator oscillators, and the furthest we have likely ever been from the 200 exponential and simple moving average, with the exception of the crash back in 2000. So, is this us going parabolic before we basically put in a top and come back down, revert to the mean? Well, potentially. It's still a little early to tell, but it would in no way surprise me whatsoever. Russell still looks like total trash. Obviously the worst performing of the indexes, doing just absolutely nothing basically for an entire year while the markets go parabolic. 200 simple well above the 200 exponential, and we're barely able to stay on top of it at the time. And if we switch over to the monthly on the Russell, we've been talking about how this was the canary in the coal mine for months, as we now have 3 confirmed months of bearishness on the histogram. We were at maximum levels on the stochastics, and we're barely hanging on to the 8 EMA. And now we have 1, 2, 3, 4, 5, 6, basically 6 months of gains wiped out by this single candle right here. We're basically back to our February prices. And if we just have even a retest of the 21, that's going to take us back to December 2020. So, if that happens throughout the rest of the year, we would sell off back down to roughly, $2,000. That would basically be an entire year of sideways action on the Russell, an entire year of no gains in the Russell 2000. And again, if we revert to the mean or something like that, we're talking about like 1200 levels. Again, I'm not extremely bearish on these right now. I don't necessarily think we're going to have big dumps, but we're seeing some serious weakness, and none of this is a surprise, obviously, especially as rates rise, asset prices will fall, inversely correlated, because, obviously the cheaper money is, the more likely people are to just throw it around because it's free. But as it gets more expensive, as rates rise, as the dollar strengthens, we would expect all different assets in all different markets to just get absolutely shellacked as people have to reevaluate their actual valuations. And, especially in the tech sector, many of these things don't actually have any valuations. They're made up because they don't actually make any money. They're just fantasy businesses, that essentially have revenues that are exceeded by their costs. But obviously the way we value businesses now is by quote unquote customer acquisition and, future potential earnings, which we know how that works out from the 2000.com bubble. XLB, so just going through our sectors, material sector looks very weak, barely hanging on to the 200 simple, which is above the 200 exponential. 821 have crossed the downside. We have retested the previous lows right here. Looks weak. XLC, communication, same thing, getting the cross with 200 exponential and simple. As long as the 8 and 21 are crossed to the downside, I think it's realistic to have a target around like $76. XLY, consumer discretionary, once again, 200 simple is above the 200 exponential. We're still up here near the highs, but it would not be unrealistic to think we get a check of the 200 exponential and simple around 175 in the near future. XLE, energy sector, showing some strength right here. Natural gas and oil rising. There is definitely some potential here, as this has basically gone sideways for some time now. The 200 simple is above the 200 exponential, and this is by far the worst performing sector, over time. If you look, people are saying, oh, it's the best sector performing of the year. CNBC's like pushing it all the time. Energy is doing great. Well, it's doing great depending on what time frame you look at. If we look at from a year ago, sure, yeah, the energy sector is doing great because it's still down from its previous highs in 2018, 2014. That's when oil was peaking up here. We basically have been massively down from that point. We're at half the price here on oil, half the price on the energy sector. So yeah, great. We're having an awesome recovery. It's doing extremely good. If you look at only this little period right here, sure, energy sector is doing great. Look how awesome it's doing. It's up, how much from the lows here? Oh, wow, 100% from the lows. But it's also down 50% from the highs. So, make sure that you're keeping these things in perspective and paying attention to what charts you're being shown. Because, while energy may have some further upside, it is by far the worst performing asset class, over a longer period of time. XLF, financial, up here retesting the all-time highs. I would expect as rates rise, probably financials to continue to rise as well. Potentially depending on infrastructure and whatnot, possibly materials also. But right now, I think financials, as rates rise, is probably a safe bet, as most of their money is made off of rates, of money. The cost of money directly benefits their business plan. So, the fact that they've been floating up for this long, speculatively, is it already priced in? Well, we'll have to wait and see, but I think we probably have further upside. And while the 200 simple is crossing above the 200 exponential, this is probably one of the strongest sectors if you're looking at fundamentals. XLI, industrial sector, just weak, going sideways here for month after month after month. 200 simple above the 200 exponential. barely able to stay on top. We'll see what happens, but definitely does not look good. XLK technology, definitely seeing some weakness come in here. Very, very powerful weakness. I would expect this to perform extremely poorly as rates rise, because these crazy valuations, these ridiculous, made up valuations for many of these tech companies, where instead of using like PE ratios, price to earning, they are valued based on like price to sales. And even based on price to sales, you're seeing valuations that are like 20, 30, 50 times sales, for companies that don't even make any money. They have no actual earnings because they've never generated a profit. So is it unrealistic to think we come back and retest the double top back here from April 2021? Lines up perfectly with 200 exponential and simple moving average. I think tech probably comes down to like 140 over time. XLP, consumer staples, retesting the 200 exponential and simple. We see here that the 200 simple got above the 200 exponential. 200 exponential is back on top right here. So this actually technically looks stronger than most of the other sectors. But, we'll see. We'll see. I think part of why the select sector is, for consumer staples is so important is, you have cheap products in here that are necessities, but then you also have expensive products in here. And as we see essentially wealth gap between poor people that can only afford to buy like what they need and rich people that buy some of the things that we find in the consumer staples here, this tends to, still maintain a higher price because we're seeing basically like a serious divide between the super rich, the kind of rich, the middle class, and the poor people. So, and the middle class is the ones that really suffer through all this, because the poor get all the handouts, the rich get, all the benefits because they're closest to the printing machine, and then the middle class gets to pay for everything. XLRE, real estate, obviously showing some weakness now in the actual sector, in real estate, in housing, in builds, and everything. We're seeing more stuff come on the market, more supply. We're seeing less sales. People are getting tired of paying the prices. We pulled forward a lot of the demand, and now we're seeing weakness in the sector. Not unexpected, but chart-wise, probably one of, if not the strongest of the charts we've looked at here. XTN, transportation. Again, this is very important, as transportation basically topped out, back in May of 2021, but has been basically range trading. I mean, at one point in time, it came down and tested the 200 exponential and simple, and it took us all the way back to like February 2021 prices. So the fact that we're just coming up here, basically double topping, retesting, and putting in a lower high as the 200 simple crossover the 200 exponential tells me that, we're probably going to be seeing weakness throughout the economy. The more expensive it is to move goods and services around the world, the less likely people are to do it. And I think this ties into the theme of deglobalization. For the last, 10, 20, 50 years, we've been basically, increasing our globalization, like transporting, outsourcing, work from other countries, manufacturing, etc. And then just, having the cheap people do all of the work, and then everybody just buys it from them because it's more efficient. But now that resiliency is an issue, now that transportation is getting expensive, and potentially like energy prices, nat gas, oil, etc., it will incentivize countries, companies, people to get their goods sourced locally instead. So jets obviously extremely weak. Unless you're listening to CNBC, then this thing is just exploding to the upside and just absolutely doing phenomenal. But if you ask me, what does this look like? It looks like an absolutely pathetic chart. We basically sold off massively from like $31. We're unable to ever recover back to the prices of 2018. So this thing peaked out in 2018, went sideways for literally years, and then capitulated down to essentially nothing, as the only reason most of the airlines even exist right now is government bailouts. And then what does this actually look like right here? Well, it looks like a giant head and shoulders pattern. It looks like a pathetic dead cat bounce to a lower high. We have a left shoulder here, neckline, head. We have a neckline here again. We have a right shoulder that basically ties in with this one right here. We're underneath the 200 exponential and simple, and it looks like this thing is getting ready to roll over, and it'll probably go to zero because most of these airlines need to go out of business. Eventually, people are going to stop wanting to bail them out. Politicians, government, taxpayers, eventually these things can just go bankrupt, and then other companies can acquire them, buy their goods, and then provide those services. That's how economies are supposed to work. Well, free economies anyway. Hail, again, looks absolutely terrible. Looks like a giant descending triangle at the top of basically a parabolic move to the upside. And it looks like it's getting ready to capitulate. This is a little bit more of the rental cars and whatnot in this, but again, part of the transportation sector, telling us that support has been broken and there's about to be a capitulation move in this. 200 simple above price action, 200 exponential above price action. Now it looks like we're getting ready to let go of support. It looks like this is about to enter into a bear market. UPS technically has entered into a bear market. It has now closed below 200 exponential and simple. They both have a slope line to the downside below the 8 and 21. UPS looks like trash. Definitely has some potential support areas around like 175 or so. But typically this stays strong going into the holiday season, but not looking great right now. As I think the quote unquote consumer is strong argument is kind of going out the window, as in fact the truth is coming out and the consumer is broke, the consumer is busted, as the federal plans go away, as people have to start paying their bills again. We're seeing credit card debt at highest levels ever. We're seeing margin debt at highest levels ever, and then all these stocks and indexes were at highest levels ever and are just beginning to capitulate now. Not a good sign for the world economy, for the United States economy, and for basically the future. But as long as we just keep making debt slaves, we should be able to pay for all this, no problem. If only we had another $5 trillion that we could waste. That would probably help long term for sure. If we just spent that on human infrastructure, I think the whole world would just be better for it, especially the United States. FDX, FedEx looks absolutely terrible. We had this little gap down here, couldn't even close that gap, and now here we have a massive gap down here. We have lost support. FedEx looks like straight up trash. Probably one of the worst charts in the transportation sector. Again, just absolutely horrible. Absolutely horrible. Bears are clearly in control, and anything buying in FedEx is just basically trying to catch a knife at this point in time. Mgm Grand, probably one of the stronger charts in the market, did break above this resistance, coming back down, trying to find support. Very important level though. This is a key level I would expect it to top out in. It really needs to hold 42.85, or it's potentially going to look like basically a throw over after a long trend to the upside. So all right, let's jump over to the dollar next. Obviously, the dollar has broken out of our technical pattern, and apparently now I'm not the only one looking at this, as everyone is just talking about the dollar strength. We have clearly broken out of our head and shoulders inverted bottoming pattern, our Eve and Adam bottoming pattern. We have broken above our Fibonacci key resistance level here at 93, and now we are in the process of getting our measured moves up of our two bottoming patterns here. And I expect continuation back to initially probably 95, 75, but after that potentially as high as 98. We've been talking about this for some time. It had clearly put in a bottom, and now everyone is saying how the dollar is strengthening, and no one understands why, because it should be going to zero because they're printing trillions and trillions of dollars. But what they don't understand is this is not the dollar in relation to assets. It's the dollar in relation to other countries' currencies. So the basket of currencies is weakening compared to the dollar. So what does that mean? It means that, we're the cleanest pair of dirty underwear in the hamper. We're on top of the 200 exponential, we're on top of the 200 simple, and they both have a slope to the upside. The dollar will probably see some slight pullbacks along the way here. I would expect it to come back down, cool off a little bit here in the near future. But at this point in time, free sailing for the dollar. I do expect this thing to continue pushing to the upside powerfully. Tesla basically looking better than most. Back up here retesting the all-time highs after basically did nothing for month after month after month. Basically just operating inside of this channel, getting close to the area. This was the area we were really looking out for, that 781 level. It was a previous high back here. Not unrealistic to think we would push up to it, and then that's our decision point. If we don't break above here now, I would expect capitulation move from this. If we do break above here, I would expect retest of all-time highs. But I mean, I think Tesla is probably one of, if not the most overvalued stocks in the market. So while I believe in the company long term, I think a lot of the bullishness in Tesla is one, call options, two, people just running back into what they trust instead of all the shitty stuff they like diversified into as the market capitulates. And then also, I believe they just opened up a new gigafactory as well. And then Elon Musk is free. He's back on the market now after his wife left him. So I'm sure that him and X will probably, or her and Elon will have some issues there with X, but hopefully he's still hodling his Dogecoin down to zero. Uber is next. Uber looks absolutely pathetic. Very clearly in a bear market, 200 exponential and simple slope to the downside. We got the attempted retest back to the upside. That has now failed, and I do expect further downside. This was just all based on basically Uber coming out and saying we're going to be able to make money one day in the future. We predict, our earnings will be positive and will actually turn a profit. I think they'll probably turn back around, drop 10%, and close the gap at $40, at which point in time we'll see potentially what's going to happen with Uber. Pinterest looks absolutely phenomenally terrible, getting absolutely crushed, destroyed. The capitulation move is literally inbound as we speak. We have taken out the previous swing low of the cycle since we topped back here in February. We are now below the 200 exponential and simple slope to the downside, below the 8 and 21, breaking down from key levels. Pinterest just looks terrible at this point in time. Probably just going to be stepping down $5 at a time until eventually it tries to base out around $35. But it just looks like it's going to be going full slinky theory at this point in time. Just a slinky going down some stairs with some occasional bounces, only to be followed by lower lows. Wish looks absolutely terrible. All-time lows. I would expect it to continue making all-time lows until it doesn't. I see nothing coming from this right now. There's no life. It is literally just a dead asset. Its throat has been slit and it is just bleeding out occasionally along the way. Maybe we'll see it take a breath, but I would just expect it to roll back over and continue to die along the way. Airbnb looks terrible. Came back up here, tried to retest do we even need to do technical analysis? Is there even a point? Everything looks terrible. These markets have looked terrible. We've seen this coming for some time. It's no surprise. Maybe I'll just look at 3 charts. I'll find the best 3 charts in the market, and we can just look at those. Looks pathetic. Came back up, retested resistance. Now expect it to just break down from here. Bumble, terrible, as expected. Could not get back above key support level around $58. And now it looks like it's getting ready to break out of the triangle, break to the downside. It was a bullish pattern, but again, unable to get above these levels. I think this thing probably revisits the lows in the very near future. Baidu, China's stuff looks terrible. Attempted to come back up here. Clearly in a bear market now. The 200 simple has rolled over. 200 exponential has a negative slope. The 8 and 21 are curved to the downside. Baidu looks terrible, especially when you look at a longer time frame like the monthly. Looks like it could just go to zero. Baba, absolutely terrible. 200 exponential and simple slope to the downside. Just getting absolutely crushed. There's some support along the way here. Maybe it bounces here. Maybe it comes down and retests 130. At this point in time, you're just catching a falling knife with a blindfold on. No, thank you. I mean, China has been the canary in the coal mine for months. We've been expecting this. We saw the weakness in the Chinese stocks, and then it was the regulation, and then it was the Evergrande crisis, and then it was this, and then it was that. Whatever. I think China is just a couple months ahead of us. Same way they were a couple months ahead of the world when they dispersed the coronavirus throughout the world and didn't tell anybody about it. I think the stock market is just going to do the same thing that all the other countries' stock markets are going to do as we realize that, things are not good. And they've spent a ton of money and they spend it on nothing. They acted like they were going to spend trillions of dollars around the world and then things were just going to go back to normal. And in all actuality, we have achieved nothing. We have accomplished nothing, and now we've just spent up trillions and trillions of dollars. So we spent it all on beers when we shouldn't have been spending it on saws, as the analogy goes. Shout out to my boy, the uneducated economist. TME, 10 cent, looks terrible, all-time lows. I would just assume it continues to make all-time lows. Below 200 exponential and simple, looks absolutely horrible. Diddy, looks terrible. Coming back down here to revisit the lows. I would expect this back down at like $7, maybe $7.15 very soon. Looks terrible. Below the N21, extremely weak. BZ Kanzun Limited, one of the stronger stocks. Could not hold this level though. Really needed to just hold above 36 bucks. 821 have crossed back to the downside. Probably going to come back down and revisit the lows. It's got some support around 32 bucks. After that, $29. After that, new all-time lows. JD.com looks absolutely terrible. Tried to save the 200 simple and 200 exponential. Could not do it. Got rejected and now capitulating, selling off. I would expect this to come back down to like $62. After that, just catching eyes with the blindfold on. Looks terrible. China looks absolutely terrible. NEO, same thing. Below 200 exponential and simple. Slope has flipped over. China is in a bear market. China is in a bear market. Bear market. Zero life out of China at this point in time. It looks absolutely terrible. $31 is our low right here. If we lose $31, again, same thing. Slinky theory. Maybe it goes to 26, then 21, then, 16, $5 increments until it gets down to $10. Let's remember that this thing was bankrupt and basically at zero. In October of 2019, it was at $1. It ran up to $65. China nationalized it, and I expect it to go straight back down. EDU looks terrible. Just hanging out at the all-time lows after capitulation move. Does it close the gap back to 577? Probably one day, but does it go to $1 before that or 10 cents? Who knows? Looks terrible. Peloton. Oh yeah, Peloton falling off a cliff as predicted, as expected, as forecast. Coming back down here to revisit the lows at $81, and I think it blasts through those lows and comes down here and starts putting in new all-time lows below 200 exponential, below the 200 simple, and a trash bag company that will literally kill your pets or your children. So careful with Peloton. But they are making their own sweatpants and hoodies. Hooray! So that's positive. Taiwan Semiconductor Manufacturing Company, aka TSM, looks bad. By far underperforming the entire semiconductor space. Below the 200 exponential, lost the slope. Still below the 200 simple, but still slope to the upside. So there's a tiny itty bitty bit of hope left. But this is again just looking like a topping pattern, as we have a very clear support here at the bottom and just a series of lower highs from our peak back here at 142. Looks like basically a giant descending triangle topping pattern before the capitulation move as it loses the 200 exponential and simple moving average. Intel, INTC, looks absolutely terrible. Has not put in a new high since 2000. So 20 something years later, and could not get above its previous all-time highs. Triple bearish divergence on the monthly, below the 200 exponential, below the 200 simple, and the slopes are rolling over. I expect this to go much lower. Probably going to revisit like the $40, then the $30 range. One day it might be good, as they are finally going to invest in actually creating semiconductors, maybe build a foundry, a factory inside the United States. Maybe countries will actually get a brain instead of just outsourcing everything to slave labor in other countries, which is basically what's wrong with the entire world economy. NVIDIA, one of the stronger in the semiconductor space, finding some support at the previous little double top right here. But, if this area doesn't hold, coming down to revisit 200 exponential and simple. If I was going to be, bullish on any one semiconductor stock, it would be this one. But let's keep in mind the canaries in the coal mine are 1, repo market, 2, semiconductor space, 3, transportation sector, 4, interest rates. All 4 of those things are pointing towards bear market, just as they did right before the capitulation dump leading up to coronavirus. So what is this telling me right now? We're probably putting in a macro market top. And I've been saying that for months, at the highs, at the tops, so none of this is obviously unexpected. It's just playing out now as expected perfectly. And, everybody is just trying to make up reasons why. It's because of this. It's Evergrande. It's that. Evergrande has lost like 90-something% of its value in like the last year. It didn't just go down overnight. Evergrande has literally just been capitulating for like a year. And then all of a sudden it just got popular. AMD, Advanced Micro Devices, again, topping pattern, breaking down from the triangle. It has some support back here at like you know, just under $100. But again, this thing is extremely overpriced. I expect it to come back down to $90. It's probably worth somewhere around like 50. So I would not be surprised to see this get absolutely crushed. The valuations are just absolutely ridiculous on some of these. SMH, Van Hector Semiconductor ETF, again, retesting the previous highs. You know, not good if it breaks from this area. I expect it to revisit 200 exponential and simple, but I think this is basically speaking to the serious issues. And I talked about the semiconductors, how they were going to put in all-time highs for a while, and then eventually people are going to realize that these ridiculous valuations were no good, because no matter how much of a product you have in demand, if you can't make that product, your company can't be worth a bunch of money. You have to be able to actually deliver products, which is part of what's wrong with Tesla. I don't care if there's a trillion people that want to buy a Tesla and say they're going to buy a Tesla. If you can only deliver 50,000 Teslas, it's going to take you, you know, 20 years to ever meet that demand. And by then, everyone else is going to be making, you know, their version of the Tesla. So you're going to lose that first mover advantage. You're going to lose market share over time, you know, and now you're not making solar panels either. I mean, Tesla is going to get absolutely crushed. ARKK, Cathie Wood, obviously doing phenomenally, underperforming literally anything in the entire market. You could literally have went outside and bought a rock and you would be up higher than buying into ARK Fund. You know, at this point in time, she has wiped out the entire year's worth of gains. Now we're back down at November. So if you bought in prior to November, you're still potentially up on this. If you bought anytime after November, you're down, getting ready to come down here and retest the lows at $100. After that, I expect just complete capitulation move. ARKK has officially entered into a bear market. It has lost the 200 simple. It has lost the 200 exponential, rolling over. Both have a red slope now. We're below those slope. ARK is in a bear market. The ARK is sinking. You know, for all Cathie Wood's little simps out there, I'm sorry, but she is going to make a bunch of money and you're going to lose a bunch of money. Record outflows from Cathie Wood's funds. She is literally just completely failing, doing exactly what I said. She was extremely hyped up because she basically took some extremely, whatever you want to call them, wise, speculative, risky bets going into a crazy bubble, betting on things like Bitcoin and Tesla and a bunch of these innovation stocks. She has profited off of the bubble run up and she has literally done nothing since. This entire year, while everything was making all-time highs, ARK was completely failing. And I expect it's only going to fail worse and worse as people realize they will never get the money back that they put into these funds because they are years and years and years away from ever being profitable. ARKF, same thing. Technically slightly more bullish as the 200 simple has not rolled over yet, but don't worry. I'm sure Cathie will make a couple trades. The price will dump. She'll have more outflows, and this will be in a bear market very soon as well. Skills looks absolutely terrible. Broke down, new low. It's basically back here to where no one ever that has ever bought into this is in profit. Skills is literally all-time lows. I mean, there was like 7 days in 2020 when it came out that if you got into this, you're still up or basically even. Everybody else that has ever purchased into this, you know, is now underwater at the price they purchased at. Clearly in a bear market, looks like total trash. Teladoc looks like total trash. Broke down, putting in new lows below the 200 exponential and simple, very clearly in a bear market. I think over time we'll come back and retest this peak back here at like $85. You know, there's a theme in the stock market, and it's bear market. There's a theme in cryptocurrency, and it starts with a B and ends with an air market. So let's just keep that in mind, guys. Palantir, bought the gold. We bought the gold. Well, gold is capitulating now. We're now losing the 200 exponential and simple. I'm sure it's just a matter of time before Palantir comes down here, retests the lows at like 21. Then after that, 17. It'll probably be back at $10 before long. Yeah. UBX, Unity Biotech, you know, basically still holding on to this level right here. If it breaks down from this level, it just goes straight to zero. Do not pass go. Do not collect $200. You know, this is literally the last line of defense. Looks absolutely terrible. Unity Software, again, just came up, put in a lower high, coming back here to fill that gap from February of 2021, fill the gap, and now what's happening? Probably going to come back down here and retest 200 exponential and simple at like 117, 116, something like that. Does not look good. Losing momentum. Still above the 200 exponential and simple. So it's better than 99% of the other things out here in the market. But, you know, again, it's just the cleanest, dirty underwear in the basket. And it's got some stains on it. Let's be real. Zillow looks absolutely terrible. Absolutely terrible. 200 exponential and simple have rolled over. We're well below them. Clearly in the bear market. Barely hanging on to support back here. You could argue that it has broken down from that support. You know, it has some support back here at like 65 bucks. So trim another $20 off of Zillow, and I think that's probably our target. Yeah, 20 bucks off. That's also going to line up with our key Fibonacci at the 0.5 right here. Barely hanging on to the 382. So, yep, see at 65 bucks Zillow. The old Zillow has got you bent over, and it's sticking it to you. Corsair looks very weak. Barely hanging on to this level right here. Below 200 exponential and simple. Rolled over in a bear market. You know, where's it going next? Well, if it breaks down from this area, I would say probably like $22. Probably going to come back down here and fill the gap at like $21. Looks terrible. Absolutely terrible. Good products, though. Zoom looks absolutely terrible. Broke down from the low. You know, left a massive gap back here at 337. Does not look like it's going to be filling that gap anytime soon. If we lose the 230 level, you know, there's a lot of air, a lot of room for this to fall. Below 200 exponential and simple. Bear market territory. Bears are in control. Bulls are dead. All the bulls are dead. All the bulls are dead. Even the people that are saying they're bulls, they're dead too. They're just lying. They're telling you it's bullish by the dip while they literally bend over and dump on your face. Square, SQ, still hanging on to the 200 exponential and simple for now. Still have a positive slope for now. 200 simple is above the 200 exponential though. A typical warning sign for, you know, about to enter into a bear market. We have a pretty clear support back here at like 200. It's also a nice round number, but this thing has been basically just range bound since, you know, a year. It's been range bound. It's done absolutely nothing. You know, it benefited off of the crypto pump. It benefited off of like the, you know, upsetting the financials of the world. But now that story has played out and, you know, it's over. PayPal, again, 200 simple is above 200 exponential. Barely holding on for now. Looks like it's getting ready to break down. I expect to come back down to 233. Same thing. You know, it's basically wiped out a year's worth of gains. You know, it's inside of this channel, just going sideways, doing absolutely nothing. Absolutely nothing. eBay, one of the better looking stocks, but still not great. 200 exponential, still above 200 simple. You know, could not hold that key level of support. If it comes back down here to our next level, you know, probably take a buy off the 200 exponential and simple. But, you know, at that point in time, who knows what the market even looks like. I would expect at least a dead cat bounce at like 65 bucks. But, you know, looks strong compared to everything else that looks like total trash. Snap. So, yeah, it looks like that was a failed rally, a throw over, a psych out, a breakout, fake out. You know, basically push the price up, and now here we are right back at that level. So now we have some momentum to the downside. I do expect this to come down and close the gap. I do expect to get our entry at like 62 bucks. The question is, are we even going to want it at that point in time? It is possible this area holds at like 70 bucks. If it does, by all means, maybe Snapchat just keeps going up, you know, but doesn't look good. Apple, again, breaking down to key levels, support from January 2021, but, you know, doesn't look good. 200 simple above 200 exponential. You know, that whatever people tell you about the court case and the ruling and everything, if they don't get a bunch of money and that's where a bunch of their revenue is coming from because all of a sudden people can sell their own apps, that's not good for Apple. It's not good for where they make their money from. So it is definitely one of the strongest charts right now, but doesn't look good fundamentally or technically. Well, technically it's okay. Fundamentally it doesn't look good. Amazon looks terrible. Just been going sideways forever. Barely hanging on to the 200 exponential and simple. Trying to pull the 200 exponential back on top of the 200 simple. You know, it's a decision point at this point in time. We bounced the 200s once, twice, 3 times. You know, and now we're putting in lower highs off those bounces. This thing doesn't put in a new high soon. It is probably going to break down and start retesting like probably about 3,000. Nice round number, 10% sell off. And that is just, you know, if these big, heavy weighted, you know, tech stocks start to sell off, you know, Tesla, Apple, Amazon, Google, Netflix. I mean, these things are just going to crush the indexes. So they're the only things keeping the indexes alive at this point in time. Facebook looks bad, coming back down to the 200 exponential and simple. It looks like it's coming down to like 320, something like that. Looks like trash, you know, and they're getting fudded bad because apparently Facebook is not healthy for little kids to be on. That's crazy. I wouldn't even, who would have thought? Who would have thought Facebook is not healthy? You like hear from like the designers and like key employees at Facebook and they're like, oh, I don't let my kids use Facebook. No way. Social media is horrible. And yet they make millions and billions and trillions of dollars off it. It's hilarious. Google looking very weak. Come back down here to try to close this gap. It looks like, 8 and 21 have rolled over for the first time in a long time. This is by far the most aggressive selling we've seen, basically going back to like September 2020. At this point in time, and that resulted in a retest of a 200 exponential and simple. So at this point in time, I think 2400 is pretty likely. Pretty freaking likely. Definitely looks like it wants to come down here and get somewhere around that range, at which point in time it's probably going to be a buying opportunity, but who knows what the markets will look like at that point in time. I'm sure everything else will look absolutely horrendous. Netflix finally got that breakout of the range it's been trading in forever, came back down, retested the breakout coming up here, looked like it was going to come up and put in a new all-time high, failed to do so on today's candle at $600. If it puts in a new all-time high, I would expect money to just run into this, as it's basically one of the only chairs left in the game of musical chairs. So the whatever's strong, I would expect to stay strong for the longest, especially after this long consolidation move it was in. But at this point in time, maybe I'll be right and we sell back off here and my targets are hit. Maybe I'll be wrong and it takes off to new all-time highs. But we do have a target for new all-time highs in play for 673. Do I think it gets there? I doubt it. I don't think this thing's going to stay strong if the rest of the market sells off, but it will probably stay stronger. All right. Boom. Got through our traditional assets. Let's jump into our commodities. So no surprise, gold still looks like trash. Down at 1729. I expect it to continue looking like trash. It is clearly in a bear market. Silver looks even worse. Broke down from our channel right here. We have a measure move in play, potentially taking us as low as 1685. It'll never go to 1685. Silver's the future. They're just manipulating it. Well, we broke down from a channel that we've been operating in forever. We're in a bear market. We're below the 200 exponential and simple. It's going down to the teens. Maybe 18, maybe 19. This is a very key support here at like 1850. But I mean, if they were manipulating it up here, I'm sure they can manipulate it right back down to the teens. So teeny dollar silver coming soon. Gold silver chart broke down from the 200 exponential and simple, coming back up to retest it. This is our gold to silver ratio. As expected, we're up here at 80 now. Expecting this to get up potentially as high as like 90 or so before it breaks back down. That could take months or years, but no surprises there. XPT platinum still looks terrible. Trying to rally off this level. I expect new lows here very soon on platinum. Miners look horrendous. They look terrible. First Majestic has not rolled over the 200 simple yet, but breaking down to new lows. Pretty good support at like single digits. So $9 First Majestic, probably. Silver Juniors looks even worse. I mean, just absolutely horrendous. Terrible, terrible, terrible. All the people that were investing in gold and silver did bad. All the people that invested in miners did even worse. So if you thought it was a good deal at 17, it's a real good deal at 10. USAS on a fast track to zero. It's at 76 cents at this point in time. Probably goes down to like 5 cents and then someone buys them. It looks terrible. Maybe not literally, but I mean, let's be real here. These silver juniors and pot stocks are so low that you just have to be really careful somebody doesn't just buy these companies up, because they're literally worth, the assets that some of these companies have are worth more than the actual valuations. So it makes sense for somebody to just come in and buy them, for them to just cut the cord and say, I'm out of here. So you got to be real careful, especially once they're down in single digits. Tilray, though, looks absolutely terrible. Broke down from key support here. I expect it to just continue dumping straight to zero. Straight down to zero. still massively bullish on silver, gold, miners, and pot stocks long term. But right now, catching a falling knife for sure. ACB 675. It's just so pathetic at this point in time. Surprise miss on earnings of 144%. Yeah, so it was estimated to lose 22 cents, and then it surprised with an extra 32-cent loss for a total report of minus 53 cents. And then apparently people thought it was going to be worse than that because it actually went up like 10% since then. But I do expect continuation to the downside, as this just looks absolutely terrible. Probably one of the worst charts in existence. CGC, equally just absolutely terrible, just with a little more price action. I mean, single digits here real soon. If it breaks down from this level, it's going straight to single digits. It looks so bad. So bad. Uranium stocks doing exactly what we said. Got that initial push up here. The Sprott fund, the little short squeeze, whatever. But let's be real. No one cares about uranium. It's not sustainable. I still love uranium long term, but short term, just going to continue to get crushed. I would not be surprised to see URA under 20 bucks. It is at support now though, but looks like it wants to get the 821 cross to downside. UEC, same thing, looks terrible. Key support could come down to like 250. CCJ, again, Cameco, same thing, looking like it wants to come down to like 1750. Again, long term, extremely bullish on these, but who knows, 10 years from now, 5 years from now, you really want to just hodl uranium. 70 bucks on URNM North Shore, maybe 60. They look bad. All the 821s getting ready to cross the downside, losing strength. Sprott just with the little throw over trick move. Copper, again, topping pattern. Looks like a descending triangle. Held support here a couple times, but now it's looking like it wants to break down below the 200 exponential and simple. All of a sudden, if the economy is not great, all these infrastructure plays are not going to be good, because no one's going to be building anything. No one's going to be doing anything if the economies are trash around the world. So if we go into a recession or a depression worldwide, I don't think they're going to be doing too much with infrastructure. Lithium looks like it's topping out here. Looks very clearly like it's topping out here. I would expect some strong support at like 75 bucks. This LIT lithium battery ETF, but looks weak. But one of the better charts we've looked at today. Big surprise. Hydrogen, HYDR, retesting the lows as expected. Just continuing to oscillate between $24 and $21, but looks very likely it will be putting in a new all-time low. And when it does, who knows where this thing's going to go. I would imagine probably, it already hit the 1.618 on that initial dump. So, I mean, maybe like $20. I don't know. We have to wait. This thing just doesn't have enough price action and looks like it just wants to get wrecked. LBS1 lumber futures looks like it topped out after its little bounce right here. I think it's going to come back down and retest 528 or so. Again, I don't expect lumber to just start crushing it all of a sudden. Had a very nice move up as predicted, but now it looks like we're getting ready to at least retest the lows, sweep the lows, and then if we find support, maybe that was it. If not, probably new lows. CAT looks bad, below 200 exponential, rolling over. 200 simple is starting to roll over as well. Came back up, tried to retest it, tried to close the gap. Looks like it's going low. It's under 200 as expected. Where's it going from there? It's just going to step down. The old slinky theory, probably just $20 increments. 180 after that, maybe 170. Definitely should see some support around like 150, 160. Looks terrible. Entering into a bear market very soon. Deer looks slightly better. Held support at least above the 323 mark. Bounced the 200 exponential for the first time. So, okay for now, but it really needs to get above these highs, or this is just going to look like a big old double top. Looks very, very weak. Very weak. Industrials look weak. They looked strong for a while, and they held on better than a lot of stuff, but they're starting to look real weak. AM and Terra Midstream Corporation, at highs, probably one of, if not the best chart we've looked at today. One of, probably. But the 200 simple is above the 200 exponential. And keep in mind, this thing is not even putting in all-time highs. It's just retesting like our breakdown from 2019. So while it does look more bullish than most everything else, It still looks terrible. CEMX, again, you know, not going to be needing too much cement if there's no money to build anything. And, you know, all this funding that all these governments are supposedly going to get by raising taxes aren't going to do any good if, you know, they're predicting to be able to make $4 trillion from taxes and then the economy does terrible. So then they only get $2 trillion in taxes, plus they change the laws so then people avoid half those taxes. So they think they're going to get $4 trillion. They end up with $1 trillion. And another thing, too, about how idiotic these tax plans are, you know, the new 3.5 human infrastructure bill that the Dems want so bad in the United States is like an absolute joke. Their payments, they're going to generate the money to pay for it over a 10-year period, but the programs they're offering are like only going to last for 3 years. So it's going to take an extra 7 years to quote unquote pay for itself. And we all know that whenever the government starts a new program, it never goes away. So like every 10 years, we're going to be 7 years behind funding it. So like after, or every 4 years. So after, you know, let's say Biden wins another term and ends up in the White House for 8 years, like 17 years later, it'll be paid for. You gotta love political math. So yeah, CEMX barely hanging on to these levels. Looks like it wants to lose the 200 exponential and simple. I mean, this stuff just all looks like it wants to just let go. Let it go, let it go. Cleveland Clips looks like it topped out here. These iron ore / steel companies not looking good. Just the space in general. Hanging on to a 200 exponential, but simple is above the 200 exponential. Not good. Not good, guys. Ford basically got the breakout of the channel as expected. Hit the measure move perfectly. Hit our target zone literally to the T. Oh my gosh. It's like we've done this before. This technical analysis stuff, man. It really works. No, you just go back and move things when we're not looking. Sure. I expect it to hold support here at like 14 bucks at least temporarily. A bunch of like bullish news on Ford. And again, if something's doing decent or like not terrible or actually good, people are just going to like flock towards that. So maybe this thing even breaks out. I don't know. GM, a little worse, but still getting some of the same like tailwinds, trying to push it up here, but you know, can't get back above the 200 simple. Save the 200 exponential, but it just doesn't look great to me. I'd rather be in Ford based on the chart. Hasbro obviously could not hold that level we talked about. Now it has broken down. It's below 200 exponential, you know, below 200 simple. It's rolling over here. You know, we spoke specifically about these levels. Could not get above that 786. And now here we are. It looks like that $89 target. And then a breakdown from 89 comes back down to 82. I mean, it looks bad. All these charts look bad. Everything bad. My next stream will just be 10 seconds. And I'll just be like, hey, welcome back. Everything still looks like shit. See you next week. Works. Looks terrible. WRX. Lost to 200 exponential. Back down here retesting 200 simple. I mean, this thing has been in a downtrend for literally like ever. So if it can't hold the 200 exponential and simple here, it probably just resumes the downtrend and looks like this. I mean, it can't go back down much lower. It got down as low as $1. It's at $2 now. So maybe it goes down to 50 cents if it gets continuation. Looks absolutely terrible. Any little meme stock action, Sphere, you know, same thing. Been in a downtrend forever. Broke above the 200 exponential and simple. Oscillated. New highs here. Captured a nice little pump move on that. But I do expect to come back down to like 240, 250. But, you know, this is a trash bag meme stock. It's been going down forever. It has literally, I mean, this is like the micro strategy. It was at $2,000. Now it's at $5 and it got as low as 34 cents. So it's basically just micro strategy, but without trash bag Michael Saylor attached to it. So, and I mean, it's still $5. Micro strategy is like in the hundreds. So I guess if I was going to buy a shitty stock that'll probably never go to new all-time highs, I'd rather buy that than micro strategy. Weight Watchers looks terrible. Tried to get a little push up here. Hard rejection. I expect just massive continuation to the downside. If it can't hold on to like 1760, I mean, it's probably going to come back down to like $14. Revisit the lows. This looks terrible. This looks terrible. I mean, I don't know what's going on here. Man, I could say so many like funny but mean things. But I'll just say that for the next stream. Walmart looks bad. Consumers are strong. Well, apparently all the Walmart shoppers are shopping at the Dollar Tree now, which apparently is going to change their name to the $1.25 tree because they got to raise their prices. So not good, not good. Probably coming down to like 135, below the 200 exponential and simple, losing the slope on them. It did lose the slope here on the exponential. It lost both slopes here temporarily and then pushed up, for another retest to the top. But at this point in time, what's going on here? Just a double top before the capitulation move. Step down to like 127, 125, somewhere around there. Looks terrible. Everything looks so freaking bad right now. But hey, when you have a bunch of cash and cash is crushing it and you've been just waiting to deploy it into the markets, we've got a whole bear market to decide when to buy. So I'm not exactly rushing back in here. I'll be over in the comments here real soon. I see you guys over there. Western Asset Mortgage Capital Corporation, blah, 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 blah. WMC, looks bad. Broken down from key levels, broken down from that ascending support line that we had talked about. I expect this thing to start revisiting some of these key levels. Looks terrible. And as the inflation trade fades, or the scare of inflation, I would expect like REITs to not do well because, they're protecting against inflation. So, and then obviously housing market's in a bubble. It's like, which bubble do you want to be a part of? The one that when it pops the least. Probably that one. Our kid says, quick hello, and we'll watch stream later, which I'm sure will be informative as always. Yeah, good to see you, brother. Yeah, I know a lot of you guys are on different time frames. So if you're watching this later on, make sure you leave a comment for the YouTube gods. Adam U, aka Adam, good to see you again, brother. Just joining, he says, thanks for all the great analysis. Have you covered crypto yet? Nope, it's about to be crypto time, my dude. Crypto Connect. And Bubbly's in the house. What's up, Bubbly's? Good to see you as always. What's up? Yeah, so let's jump back into it. I'm going to keep this one relatively short. We're at about an hour now, so I'm going to cover crypto and some meme stocks, and that'll do it for today. Not going to go on too epic of a rant here, as basically just everything is just doing what we've been saying. So there's nothing really to rant about. I'm sure we're going to be wrong about something here in the near future. Maybe we can rant about that. Maybe something crazy will happen here in the near future, but not really much to rant about, honestly. I can only rant when stupid stuff's happening or unexpected stuff, and it's literally just everything we've been talking about playing out like perfectly in like reasonable time frames as expected. So Bitcoin futures, BTC 1. It looks like it's trying to put in a little bounce here. The futures chart looks much better than the spot chart. We're still on top of the 200 exponential. We are below the 200 simple, but we're basically between the two. So this is like a couple weeks behind, like the spot market. Obviously because it's closed on weekends. So we held this key level down here at like 30,000. We topped out at like key resistance at like 52,000. And now we're just pinballing basically between the 200 exponential and simple, but we are about to lose the slope on the TJD TDMACD, and it looks like we're going to try to get across back up on the stochastics here between the blue and purple stochastic. Is that going to happen? Well, on Bitcoin it popped up and then got rejected, so we'll have to see. We will have to see. And to tell you the truth, if stock market starts to sell off, crypto is going to get crushed. There's a strong correlation between them. I know nobody wants to hear it. It's not true. Bitcoin's uncorrelated. It's a store of value. Well, it literally does. It's basically like a leverage version of the stock market, especially this chart. So probably you're wrong. Actual Bitcoin spot chart. This is Coinbase right here with the traditional stochastics, MACD, and RSI. We had the triple bearish divergence, massive sell-off. We had the triple bullish divergence, massive pump. We had the triple or quadruple bearish divergence once again, and now the breakdown. And now here we are. We were inside a channel. We are inside another channel, selling off to the downside. So till we break out of this channel, I wouldn't expect anything different. We're not putting in any divergence really. We're kind of getting a little bit of mixed signals, but nothing really special happening. We're range bound in a downward channel. Eventually I would expect us to break out to the upside, but just put in another in a series of lower highs. Does not look particularly good. And then let's look at our weekly and monthly actually while we're at it. So weekly wise, let's see what we have here. oh look, some bearish divergence on the weekly on the stochastics. So we have a high back here, we have a higher high here. So it took us a ton more energy to get to a lower price. So we have bearish divergence between the all-time high in crypto in Bitcoin and the most recent high in Bitcoin. So what happens after bearish divergence? Well, usually revisit the lows. So see you back at 30K or lower, most likely. Let's look at the MACD. Oh, look, bearish divergence on the weekly. Oh, no, I'm sorry. I don't know what I was thinking there. So we have the high right here, obviously with the high there, and then a much lower high right here. So no, only on the stochastics do we have bearish divergence. And then same here on the RSI. So doesn't look as bad, but stochastics are definitely telling us a little something. Could be wrong here. And then if we go to the monthly, we can see, you know, the last time we had a MACD signal like this, a bunch of weakness in the histograms, That was the entry into the bear market. You know, basically, once we started selling off into a downtrend on the stochastics, bear market, we're starting to see that same thing happening here as well. And then same thing on the RSIs. Once we entered into a downtrend on the RSI, you know, bear market. So looks like we're all but confirming a bear market at this point in time. As we get like a little mini squeeze. But you know what? It doesn't really matter to me. What matters is our close from yesterday. The close from yesterday was just absolutely horrible again. Let's take a look at it. So here we have on the daily Bitstamp chart, you know, we basically are below the 200 simple. We broke down again below the 200 exponential. We flipped the slope line over red. Now we're trying to push back up here and flip it back blue. It's just distribution taking place. Somebody's not done selling their crypto, not done dumping it on their heads. People that were late to the short party are getting squeezed literally as we speak right now. But, you know, until we basically take out 45,000, this still looks bad to me. So, and what is that? It's just a retest of the 200 simple. So, you know, we're slightly below the 200 exponential on the spot markets, but until we can get back above the 200 simple and exponential and save the trend, it still looks terrible to me. And, you know, obviously 200 simple on top of the 200 exponential after putting in a lower high, that's bear market every time. You know, we had the mini bear market from 14K right here. We see that exact signature comes up, sells down to 3,800 from 14,000 to 4,000. We have the 2017 top right here. Same thing, exact same signature. 200 simple on top of the 200 exponential. After we show weakness, lower high, bear market, capitulation. And then finally, our only other data point that we have to look at was our 2013 high, come up high, 200 simple rolls above 200 exponential, acts as resistance. We try to save the trend temporarily, break down from it, go into a bear market. So, you know, looks to me like the beginning of a bear market that, you know, somebody's just not done selling into yet. But what's that going to mean for altcoins? Well, altcoins are just going to get absolutely wrecked. Ethereum, slightly stronger than Bitcoin. 200 simple is on top of the 200 exponential, but we are above both of those. But again, lower high on the daily. If we look at the weekly, you know, from our peak there and our peak there, we put in basically the same high on both. And then if we look at the stochastics, we have a much lower high this time. That is bearish divergence. And here we have the peak right there. And then we have a much lower high right here. Again, bearish divergence between these two peaks. So again, looks very, very weak. Barely holding on to the 21 right now. Much stronger looking than Bitcoin though. And then if we go to the monthly, hard sell signal, left the bullish control zone. Still showing some strength here. But again, unfortunately, all cryptos are weak, with the exception of like the last hour. ETH Bitcoin looks weak, just a lower high, broke back down to 821. 200 simple looks like it's getting ready to cross over 200 exponential. Looks weak. FTT put in a new high, could not hold that previous high as support. 200 simple above the 200 exponential. Bears are clearly in control. Again, 821 have crossed the downside, holding on to a key level for now, but looks very weak. Still above its 200 exponential and simple moving averages though, as is Ethereum, which is key because the majority of altcoins are not. Majority of altcoins are much, much weaker than those first few we've looked at. Chainlink looks terrible. Bear market below the 200 exponential and simple, and the slope is red on those. It's going to be very, very difficult to get above $25 or $27. FTM, Looks like it's about to lose the 821, getting ready to cross to the downside, at which point in time, this thing has almost no support. I would expect it back at $1 very soon. Oh, there goes Solana. We're not looking at that. Hang on. Let me pull the Solana chart back up as I accidentally closed it. Oh, come on. Stupid ass trading view. Good old Solana. All right. Well, I don't feel like putting the correct indicators back on to just tell you guys how bad Solana looks. So we'll just use these ones. Yeah. Well, the 821 are getting ready to cross back to the downside. Solana looks terrible. It looks like it's literally about to let go, and there's no support. I mean, basically at like $122 is like its last attempt. Basic attention token looks very weak. Broke down from the 821, hanging on to support for now, but looks very, very weak. Uniswap barely hanging on to the 200 exponential. Basically looks like Bitcoin chart, but again, 200 simple has lost the slope. Barely hanging on to the 200 exponential. Looks very weak. Better than most cryptos though, as it is still above the 200 exponential and simple. XRP macro is absolutely terrible, but on the micro, holding on to 200 exponential, still has positive slopes, but really needs to put in a new all-time high this cycle. Dogecoin looks terrible, below the 200 exponential, negative slope. 200 simple is still technically sloped to the upside, so it still has a chance left here. If it breaks down below 16 cents, it's going straight to zero. But if it can, I mean, it really just needs to get above 34 cents. So, but that is like 100% range that it can trade in. But there's no buyers for it. It's a joke coin. It's trash. No one wants it. ADA Cardano, went from $3 to $2 real quick. The same way it went from $2 to $3 real quick. Looks better than most. Still well above the 200 exponential and simple. Probably not going to be long before it comes down here and retest like $1.70. But looks like it's about to get the stochastic cross straight back to the downside. I mean, let's be real. Cardano's trash. They do have a strong cult following though. So if you're just looking for a good cult to be in, I think Cardano's probably the way to go. But if you want to like actually buy into something that's like technically or fundamentally strong, probably not your best bet. Well, technically the chart actually looks okay right now, but Dogecoin's chart looked good for a while there too. And let's just remember what Dogecoin is. Garbage. DOT. Basically just running into resistance at key level. It really needs to get above these levels to do anything, but it just looks like it's getting ready to let go. All these cryptos just look like trash, with the exception of like the last hour. Matic, same thing, looks bad. Just so much resistance. Could come back up to like $1.25, but I mean this thing's trading very technically. If it loses $1, it's just going to go into full free fall. Go straight back to like 60 or 50 cents. Bitcoin dominance, basically looks like it's trying to put in a double bottom. We were talking about some stuff in the group right here, shorter time frame, potential little mini head and shoulders inverted right here into a double bottom with like some divergence taking place. Looks like Bitcoin wants to strengthen and altcoins want to take a dump. So, basically people just get out of all the trash coins that they diversified into, go back into Bitcoin, and, everything just sells off. That's what it looks like is going to happen to me. Total market cap, again, came back up here, retested the highs, couldn't do anything with it, and now it's letting go. Looks like it's about to lose the slope on the weekly. Looks like it's rolling over, failing to get back inside of the bullish control zone. And, at this point in time, a close below 1.8 trillion could be just absolutely detrimental. I think it's very likely we're coming back down to like 1.25 trillion very soon. Coinbase looks like straight trash. Back down at 225. Looks like it wants to come back down here and revisit the lows at like 215. This thing will be at 200 and then 180 and then 160. It's just total trash. Absolute trash. It's supposed to be like a $65 billion company. Well, probably lower than that now, but it's supposed to be a $50 billion company and still goes down whenever there's any volatility in the markets. You can't ever get anyone on the phone if you need to speak to someone. They have nonstop like phishing scams and hacks taking place. That's that's not a strong infrastructure for like the future of money and finance. That's basically just trash. Hood looks terrible. Could not maintain that 821 cross. Looks like it's getting ready to sell off here. I expect it to come back down to 39, and then I expect it to sweep the lows. 35 probably puts in new lows very soon. Again, total trash. Especially if crypto starts to die, because that's where they're making most of their money from. And now all this stuff's coming out about them basically lying. And I mean, does not look good for Robinhood. Like, they're probably going to, let's be real. SEC is going to hit them with like 10, 50, $100 million in fines. They're going to pay the fines. They're going to come back and they're just going to keep like, they're like the anti-Robinhood. They're like Robinhood, not. We rob from the rich and give to the poor. They're like, no, 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 no. We're doing it the other way around. We're inverse Robin Hood. We're going to call ourselves Robin Hood, like we're helping out the poor people, but we're actually going to steal from the poor and give to the rich. So they're basically like, they're like the Federal Reserve of like trading platforms. Yeah, that's exactly it. They like help with the inequality, like income gap between the rich and the poor. But they're going to like call themselves Robin Hood and pretend like they're helping out the poor people, helping out average Joe, you know. Right up until they start crushing it on a GameStop short squeeze. And then the truth comes out. Which, you know, you deserve to get wrecked if you go back to trading on Robinhood after they basically like screwed over their clients. Like, you're basically just a narcissist or like a masochist. That's the one I'm looking for. You're basically a masochist if you still use Robinhood. You know, you're begging for it. And you deserve it. You deserve it if you use it. MicroStrategy looks like total trash, hanging on to key levels here. Just a reminder, in case no one's ever looked at the monthly on MicroStrategy, let's just zoom back here. Why MicroStrategy is such a piece of trash. Why Michael Saylor is such a piece of trash. This was the .com run-up. MicroStrategy got all the way up to $3,422. Turned out that they were lying, that they were faking information. They were forging documents. You know, got in trouble with the SEC, paid tens and 20s of millions of dollars. Michael Saylor somehow never went to jail. MicroStrategy lost 99.88% of its value. Did nothing for literally decades. Will never put in a new all-time high. And then right around here, after going sideways for 20 years, Michael Saylor revealed that MicroStrategy was going to invest in Bitcoin. So you have a company that did nothing for 20-something years, but dump, leveled out $150, and then he basically became the marketing director of the crypto cult, and then was able to pump his stock up by 8x. So, yeah, I mean, you got to give it to him. Hey, once a scammer, always a scammer. Keep it up, Mikey. But getting ready to enter into a bear market, total trash. Michael Failure, the crypto slug, the you know, disgusting human being of you know, a manipulator slash piece of bum trash. I'm sure he'll fake his death soon and steal all your crypto. And we'll see. Maybe I'll be wrong. Maybe he'll come out and he's like a great philanthropist or something like that. But probably anybody that tells you to mortgage your house, take out, you know, cash out, refi your house, borrow money against your family business, and buy Bitcoin because it's the future of money at $60,000 is probably not a good person. Probably not the kind of person you want to take advice from. So hopefully you don't get liquidated. If you do, hopefully you can find Michael Saylor's address on the internet and go speak with him in person. Because if he's so rich, I'm sure he could probably give you back your Bitcoin or, you know, help you out with your bills. But I'm sure that's probably not going to happen. Bed Bath & Beyond looks terrible. Breaking down from key levels. You know, as expected, the old meme stock Bed Bath & Beyond can't hold. You know, next target to the downside, probably like $17. Looks like it's getting ready to enter into a bear market. 200 exponential and simple rolling over. Tried to push up here, but it's just new lows. GameStonk, 821F cross back to the downside. Again, just getting hammered. 200 simple is now above the 200 exponential. Does not look good for the old stonkaroos, the old game stoppers, whatever they call themselves. $150. Next target. At some point in time, though, we're going to lose this level. And when we do, it's like 150, then 120, then like $40. So hopefully you're not on the wrong side of that one when it happens. AMC looks terrible as well. The 821 of crossback to the downside as expected. You know, expect this thing to revisit the low 30s. Damn, it's already back at $35. What a piece of trash. I thought they were using Dogecoin to let you buy movie theater tickets and popcorn. It should be at $1 million by now, or 1,000. What's our target, guys? 10,000? I can't remember. Are any of the silverbacks still watching? Or no, wait, what are you called? What are the AMC rats or something? I can't even remember. The Gorilla Boys? The Banana Hammocks? I can't remember what your guys' names are. God, there's so many. Why has everybody got primate names? Why don't you rename yourselves the AMC Sharks and I'll buy one stock of AMC. I'll join the Sharks. Anyway, AMC looks like trash. Coming down to $30 to retest the 200 exponential, it looks like. I mean, it's total trash. Obviously, it's a meme stock. No one cares about AMC. Theaters are garbage. Newegg finally hit our target. Hooray, we did it, guys. $13.92. We broke under 14 as expected. Hit our target. Didn't even get a bounce off of that either. I do expect a bounce back up. We could get as high as like $16 on this again. Retest the breakdown. But, I mean, at this point in time, we have one candle holding up the price action. We have this previous high right here holding up the price action. So, where's this thing going? It's going to $10. And again, this is an actual business that I've purchased things from before. So, you know, the same way that like AMC was an actual business and now it's a meme stock. Newegg was a business and now it's a meme stock, but it's still a business that could function in the future. So I don't know where the floor will be on this one, but I know the floor for AMC is bankrupt. DraftKings, look, throw over. New lower high. I would have expected this thing to stay stronger, but it is now officially in a bear market. It did go into a bear market technically right here and then push back up to a lower high. But, you know, you're only going to pull that move off so many times. Bears are in control. This looks extremely, extremely weak, especially going into like football season and stuff. Apparently people have run out of money to online gamble with. Am I the only one still gambling online? Am I it? Because I don't even use DraftKings. So, I mean, maybe I can help them out. I can gamble on DraftKings. I usually win though, so I'm not sure that I'm like an ideal client for them. Yeah, DraftKings coming down to like $42. So what's going on? Kathy, all your picks. It's like Kathy's little like clan of followers that like buys into everything she buys, and then like it just gets dumped on her head, or she dumps on their heads. I don't know who dumps on who. It's probably like a group dumping. It's sort of like the R. Kelly of investing. Like, you know, you're not sure who's like doing what, but you just know there's a bunch of pee and poo, some illegal activities. Somebody's probably going to jail eventually, and there may be some minors involved. Which, you know, not to make light of the whole situation, but let's be real. R. Kelly, Michael Jackson, we all knew they were guilty. You know, money can only get you so far. Eventually, you're going to end up in jail. So stay away from minors. Don't be rubbing poo or peeing on people. It never works out good in the end. And I'm talking to you, AMC apes. Stop peeing on each other. Stop throwing poop at each other. You're going to end up with pink eye and a bank account that says 0. So, but that's it for today, guys. I'm going to jump back in the comments real quick and call it a wrap. Nice, quick one. What's up, Peter? Good to see you, my man. He says, I'm waiting for the bottom to fall out of crypto. Yeah, just a matter of time. Although we're definitely seeing a quick little short squeeze going on right now. Bitcoin is my hedge. Adam says, laugh out loud at the Sailor jokes. Oh, yeah. I love making fun of Michael Saylor. Michael Saylor and AMC are like two of my favorite to make fun of. AMC Tendies Army. Yeah, the Tendies Army, the apes. That was the one I couldn't think of. You know what, though? If AMC rebrands, starts a whole new business, but just uses the name AMC, and then we get like a cool mascot, like a coyote or something, or maybe a shark, a ninja. There's got to be something cooler than like all these primates. But I guess like it makes sense that if you're going to be like your whole investing platform is going to be like a forum on the internet, and you're going to be like an actual knuckle dragger when it comes to like, you know, looking for an actual functional business that you want to invest in versus just like a meme stock pump, it makes sense to pick like a primate because you're like, oh, we're degenerates and we're not intelligent, and like actual people with brains evolved from us, like, you know, depending on what you believe or whatever, macro, micro evolution, you know. But, you know, let's be real here. It's like a demeaning name. That's like calling yourself like, oh yeah, I'm part of the crypto cucks. Like, what? Why would you want that as your name? But maybe it's like Jamie Dimon secretly is like the founder and director of Wall Street Bets, and he's just like laughing at how stupid all these people are. He's like, oh man, you guys are screwing the hedge fund and the bank so bad. But really, like, Jamie Dimon's just taking all the money. I mean, it blows my mind. It's like, oh, I'm sure there's no hedge funds. There's like no smart money, no Wall Street guys in any of these public groups where they pump meme stocks. I'm sure it's all just regular working class plebs / people living in their parents' basement. Yeah, I'm sure. If you're a part of like the whole meme stock, Reddit army, I have a feeling that you're going to be doing chores for your mom again very soon after you blow out your account with options once we go into the obviously coming bear market in stocks, crypto, and literally everything else. And if I'm wrong, I'll be the first one to flip the script and let you guys know if we're going into a bull market. But right now, like, we saw how many charts today, and like 4 of them are bullish and 2 of them are for the 10-year treasury yield and the other one's for the dollar. So you should probably invest in the 10-year treasury yield, aka sell bonds, and the DXY, aka hold cash, and everything else looks like trash. So, and remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. But that's it for today, guys. Oh, what Honkiness says? Oh yeah, Honkiness. Did you ask me about those? I meant to do those today, and I totally forgot. So yeah, let me pull those up for you, man. I remember you did ask that in a previous video, and I was like made a mental note of it, and we see how well that worked out. VXX and QID. VXX, can you be more specific? Are you talking about the energy? I'm not sure which one you want, man. Is it the iPath Series B S&P 500 VIX short? Is that what it is? You're talking about stonks, not some kind of weird crypto, right? And QID. Oh yeah, that's definitely what you're talking about, because I know what QID is. Okay. All right. So yeah, VXX is the S&P 500 VIX short-term futures. Yeah, I mean, this is, you really got to look at this on like a daily. I mean, it looks like it's trying to pop up here. It's all but confirmed the 821 cross here, and that was our last little move. But this is basically just like looking at the VIX, but with like theta, like time decay. Because we're basically just in that like descending triangle. I mean, really what you're looking for on this, in my opinion, is you're looking for that retest of like 44, coming back up to retest like the 200 exponential and simple. But it's basically put in like 3 drives of big divergence here. The first drive was like back here in this low, second drive like right through here, third drive right through here. So this thing looks like it wants to explode to the upside. And this might be the run that does it, because it tried once here and failed. And then depending what happens in the stock market, if we basically get continued selling, especially going into, if the stock market doesn't bounce and we sell off going into like the weekend, like we, end of the month close in, Friday, weekly close, etc. That's basically going to look extremely weak. And you're probably looking at this move right here, which at this point in time, I mean, the risk reward on this is phenomenal. 14% downside and 58% upside. So you're looking at like a 4.3 to 1, 4 to 1 risk reward ratio. So it's like, will you risk $10 to make 43? I mean, that's the type of stuff I like. I mean, I won't trade anything with less than a 2 to 1. So, I mean, could it underperform? Sure. But even if you took half that, even if you took half the move, you know, you're looking at like a 29 upside, 29% upside with the same 14% downside. It still looks nice. So, I mean, realistically, you could have just two different targets, you know, and depending when it gets there, realistically, something like this is, you know, basically retesting the previous little high close right here at like 35. That's where probably I would look at taking profits. And then the next level, I would look at somewhere along either the low from back here, like just under 40, depending when the 200 exponential and simple get there, when this move happens, you know, potentially up to like this high up here at like 48. But, you know, again, it's nice risk reward regardless. I mean, this could easily fail though. The last few times it got a nice little pop and then immediately sold off. Nice little pop. But one thing that tells me this time's different. This might be different. Is we got a pop right here across and then it sells off. We got a pop right here across and it sells off. Pop right here. Pop right here. Not even like barely a pop right here. And now here, look what we got. We have a pop right here and then immediately sells off and then another pop coming off of triple bullish divergence. You know, this looks like this is trying to carve out a bottom. So is this the time to take the bet? I mean, that's up to you, but sure looks good to me. Good call on that one though. Definitely worth taking a look at. But again, you are lightweight catching a knife on that one. And then the QID, this is like just a ultra short QQQ. What is it? It's like triple leveraged Qs. It's like triple leveraged tech short. I mean, it's like same type of thing. You know, you have basically, I mean, maybe even more so, because you have basically just like, you know, depending if you're going to look at this peak right here, 1, 2, 3, 4, or just looking at 1, 2, 3 right here, and you're starting to gain momentum in your favor. And again, you have the cross on the 821s here. Here you have a cross and then a little fake out cross and it sells off. But again, you know, I would expect if this gets continuation, which it's already gotten a barely any price action move, but a decent amount of the indicator oscillators, but it is for the first time in a while above the neutral zone. So last time it was above the neutral zone, it had a little bit of follow through, but did not have momentum in its favor. So again, you know, the risk reward on this probably going to be pretty nice just for a retest of like the 200. Not quite as nice though, just because we're already so far off the bottoms. Because if you took out the bottom and kept going lower, you want to be out of that. In my opinion, again, not financial advice. You know, but you're only looking at 15% upside to retest the 200 exponential and 11% downside if we start putting in lower lows. Now, do I think that this plays out? I think it does play out to the upside, but I would not take the trade just because the risk reward. If you said you could make a trade setup out of it if you were looking to trade it though, you could realistically move the stop loss up to this little swing right here and basically say, obviously you want to be out if it takes out that low, but if it even takes out this low, you want to be done with it. That's going to give you 7.5 to 1, 7.5 to 15. So that's basically a 2 to 1. So you could take that one. And again, the 200 exponential lines up basically the top of the trade setup with the bottom right here. So it would be like a retest of resistance, a retest of the 200 exponential. And then, you know, that's where I would be taking profits if this were me. And again, you know, because it's triple leverage, the $25 would be probably my next target. I mean, again, you could get up as high here as like 26 or something like that. But again, that's going to give you like 7.5 risk with a 26.5% upside. So like 3.5 to 1. So there's definitely something there. And again, I don't love picking like bottoms like this, but I don't think it's unrealistic to think we get a move like that. But again, you know, if you're even looking at this stuff, you know, that you want to be in and out of this. You don't want to be like holding stuff like this. I mean, but again, if you're looking at this, you know probably what you're getting into. So yeah, so yeah, I got you. I knew I was sometimes people hit me with like random tickers for like crypto and stuff like that. And anymore, it like takes me a second. But yeah, you got it, brother. Show me the money. Yeah, I know that's right. Well, good luck with it, brother. Again, though, guys, remember, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. A couple people had reached out to me about the group. I got back to hopefully everybody. I didn't really go through my spam folder, but if you message me about the group, about the indicator, about joining, and I did not message you back, my bad. That was an accident. Just message me again and I will get back to you with the info that you requested, how to join the group, etc. $100, you get the indicator for free permanently. Yeah. So there we have it, guys. Appreciate everybody. Everybody have a good night, and obviously not financial advice. Make sure you leave a like, comment, share, subscribe, tell your friends, tell your mom, whatever, all that good stuff. And yeah, that's it for me. I'm out of here. We'll see what happens with Bitcoin if we get a little follow through. Ethereum, crypto in general. I'd like to see a little bit of strength out of it. But I mean, the most important thing to watch, and the key thing that I'm watching here, is basically we need to break back above 45,000. We now have basically a hard bottom right here, and then, you know, essentially the 200 simple moving average right there. And then in the meantime, all we're doing is basically just chopping around. And as far as I'm concerned, it just looks like distribution to me. So, and I still expect that this head and shoulder is going to play out. And then, matter of fact, on my other chart, I'm not even going to mess around with it, but I will show you real quick. I posted this one up in the group. You know, we basically have this head and shoulders in the process of playing out right now. You know, the breakdown, retest of the breakdown right here as expected. And now what are we doing? Well, we're basically just putting in a triangle pattern, you know, which again, I just posted up in the group, but we have basically a low back here, a high here, a low here, a lower high here. And then what does that push up? It's basically just a push up to another lower high. I mean, you could argue, since this one went slightly lower, you want the triangle right there instead. And then we're going to go to this. I mean, but essentially the point of the matter, the fact of the matter is, you know, it's basically another bearish pattern, just a descending triangle that, again, we would expect to break to the downside. So now if we start getting above where we're at right now, you know, we basically have a descending resistance line right here. If we start getting closes on like a 4 hour above where we're at right now, you know, we're probably going to come back up here and start retesting like 45, 45 and a half. But I don't think that's going to happen. I honestly, like, I just don't see enough bullishness in anything right now to try to get bullish on crypto. But yeah, that's it for today, guys. Everybody have a good night. Not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. You know, and yeah, we'll see you on. Again, I'll put up some static videos, some little quickies throughout the week, but we'll see you on Sunday. But remember, whatever happens going into the weekend, going into the monthly and quarterly close, is going to make a big difference. If we don't see strength going into the end of the monthly, end of the quarter, the end of the weekly, if we close weak, if we see a push up in the dollar, strength in the DXY, or I'm sorry, in the TNX, and strength in the VIX, and then weakness in crypto or the stocks correlating with those things, I think that we're probably going to see some strong pressure to the downside. So as all of a sudden people start sweating, you know, this market that has been like nothing but to the upside, talking about stocks. So, but there you have it, guys. Everybody stay safe. Love your family, love yourself, take care of yourself, protect your money, you know, trade responsibly, invest wisely, and, you know, don't drink pee or eat poo. I'm talking to you, AMC apes. So there you have it, guys. Everybody have a good night. Appreciate y'all chiming in today and tuning in for the stream. Crypto Trend Trader, and I'm out of here.